Continuing on with our double entry, this is lesson 1. We're looking at a transaction example. Now, this example of a transaction we have right here, this transaction says, on January 1, 2016, bought motor vehicle by check for $500,000. Now, this is the dual aspect concept, which you learned about in the standards video. And according to this concept, it says every transaction will affect at least 2 accounts. One will be debited and the other will be credited. It says at least 2, but we're focusing on the fact that it says at least 2, right? Because some will affect more than 2. But for right now, this transaction is only affecting 2. So every transaction will affect at least 2 accounts. One will be debited and the other will be credited. So now we're going to look at this transaction to teach you how to identify the accounts that are being affected by a transaction. Now, on the 1st of January, we bought motor vehicle by check, $500,000. Now, I know you're probably thinking, this sounds like purchases. But remember, purchases is for when you buy stock that you're going to sell back. Motor vehicle is a non-current asset, so we do not intend to sell this back, so this is not considered to be purchases. Well, the 2 accounts that are affected by this transaction are motor vehicle, and how did we buy it? By check, and check means bank. So the 2 accounts that are affected are motor vehicle, so let me just, the motor vehicle account and the bank account. The next thing we're going to do is to identify which category of accounts motor vehicle belongs to and which category bank belongs to. Now, I already gave it away when I said that motor vehicle is a non-current asset, so we know that motor vehicle belongs to the assets class. Bank is a current asset, so it also belongs to the asset class. Now, the double entry rule for assets says, to increase it, you debit, and to decrease it, you credit. Now let's focus on the motor vehicle. When we buy a motor vehicle, however we buy it by check or by cash, are we increasing the number of motor vehicles that this company will have? Yes, we're increasing it. The double entry rule for a motor vehicle is an asset. The double entry rule for assets says, to increase, we debit, and to decrease, we credit. So since we're increasing motor vehicle, we're going to debit. And by debit we mean write it over here. This is how we write it. So 2016 up here, January 1, and we write the amount in the corner. 500,000, that's the value of the motor vehicle. For the bank now, when we buy motor vehicle by check, will we be increasing the amount of money we have in our bank account, or will we be decreasing the amount of money we have in the business bank account? If we're buying by check, it means the amount of money we have in our bank account is going to fall. So bank, yes, it's an asset. To decrease an asset, you credit, because this transaction is causing the amount we have in the bank to fall. So the bank account is decreasing. To decrease an asset, you credit. So we write it on the credit side. January 1, 500,000. And maybe we're wondering, why am I leaving this space in here? In this space, we write the name of the other account that is affected by the same transaction. And for the motor vehicle scenario, the other account affected by the same transaction is the bank account. And for bank, the other account affected by the same transaction is the motor vehicle account. Please rewatch this video as many times as is necessary. But remember, if you couldn't really follow, then it means that you do not know your double entry rules. And it means that you're not comfortable with categorizing the different types of accounts, putting them into their various categories. See you in lesson 2. Toodles.